Welcome back. It's time for our final guest in this edition of What the World Wants from India. And that guest is the big one. Jim O'Neill, former chairman, Goldman Sachs AMC, former Treasury Secretary of the United Kingdom, and now honorary professor of economics at Manchester University. Jim O'Neill, always a pleasure having you with us. Let me start with the global backdrop. Do you think this year is going to be tough for equities? What with a lot of central banks curbing liquidity, cutting their balance sheet?
By and large, yeah, I think the more volatile financial market environment that we've had since early winter, or certainly early Western winter, is probably going to continue. I think we have a number of cross currents that haven't been around for a long time, and most importantly, until last autumn, we had almost a straight line for equities for 10 years. So I think it is going to be a bit trickier. So I'm not sure if it will be quite as volatile as we saw in December and early January, but I think it's going to generally be more volatile. So tougher for people that just want to stare at screens every day and think they can anticipate every move. But so yeah, a more challenging environment by and large, I think.
Okay, yeah, not as easy, I suppose, as it was in 2017. Okay, let's come to emerging markets. First up, your view on China. Is it just going to be a victim of trade tensions, so it can be resolved if there is a trade agreement? Or does China have problems of its own? Is China going to be a drag for emerging markets in the global economy?
Amongst the reasons why I think it's going to be more volatile is I think the Chinese cyclical situation is more complex than it's also been for a long time. As obviously you know, for close to 30 years I've been extremely bullish about virtually everything to do with China, and I think we've got to a stage in their evolution where it was going to get trickier anyhow, and I think even without the trade dispute with the US, there are other issues that warrant concern about China. Let me emphasize, however, despite the fact it's being reported all over the world that China slowed to its slowest in 28 years at 6.8%, that still means that they created another Australia last year. So what's going on with China, particularly domestically, remains by far and away the most important single economic thing in the world. So people should not get carried away about some of the Chinese issues, but they are clear. I would say amongst many I could speak about, there are quite a lot of signs that the Chinese consumer has been slowing. It's not entirely clear to me why, and that's something the Chinese policymakers have got to try and stop.
Okay, now moving directly to India, how important are the general elections for you? Do you think it changes the meter, rhythm, direction of economic growth and earnings growth, or do you think it's just noise?
Let me apologise in advance about all the questions on India. You know, I don't look at the day-to-day, week-to-week stuff in anything like the detail I once did. Some people might think I never did, but at least I admit it. But the first thing I would say is obviously there was a big premium built into Modi's victory when it happened 4 years ago, and it's not entirely obvious that Modi has delivered on the very bullish interpretation of what he implied he would. As I've said to you many times in the past, you know, if India really did unlock its productivity potential, it could easily grow by over 10% for the next 20 years. And there's no sign of that happening. So in that sense, Modi hasn't lived up to the most positive expectations. He's not unique in that regard. It's the same for many leaders around the world. It's difficult to live up to the hype that they come in with. But against that, of course, he has undertaken some reforms. India has continued to grow somewhere between 6 and 8% under his term, which means that India now grows by stronger rates than China, and that's partly why the Indian market, of course, has generally done pretty well under him. And crucially, a lot of that growth is driven by domestic demand in India.
Well, let me come to the other issue, the budget. You're a veteran watcher of emerging market macros in general, and that's why I'm asking you, in spite of you saying that you have not studied the Indian situation. You know, a budget is upon us, and it's widely expected that it could have some huge promises of, you know, farm distress, farm relief. This puts a question mark on the fiscal deficit in the coming year. Will that be a worry for a typical foreign investor?
Again, the spirit of how I said what I said before, nobody is daft enough to let me near investing in a fund in India these days, so that's not a realistic question. But if I were, you know, I'd repeat something again that I've said to you many times. That what I'd really like to see in an Indian budget, even if it's at the expense of fiscal slippage, is some kind of powerful support for things to do with spreading education and the benefits of education to more Indian people, and to undertake other steps to help boost productivity, because of this, you know, the demographic dividend that so many people have talked about, myself included, for so long, does mean that the next 20 years, India's got the potential to do for itself and for the world what China has done the past 20 years. But it's not going to happen unless India boosts its education and skills development, and with it deal better with some of the enormous health challenges, and allow India to show the same kind of excitement in terms of labour force dynamics and attracting foreign industry that we've seen in China. And, you know, I personally would like to, if I saw a budget like that, which I think is very unlikely, that would make me very excited anew about India, even if it resulted in a bigger fiscal deficit.
Oh, okay. That's positive. Thank you very much, Jim O'Neill. It's always a pleasure speaking with you.
Okay. Nice to speak to you. Thank you.
Well, key takeaways from our experts. It's going to be a globally volatile year for equities. That said, nobody's expecting a recession. They maximum expect a slowdown, all our three guests. And well, there seems to be a preference for emerging markets. India worried about valuations and worried about fiscal and monetary indiscipline, if any. But generally, a positive outlook on the Indian economy. We wrap up this special episode of What the World Wants from India. Many thanks for watching.